You can't really control the fluctuations in the market. You can control your reactions to them. So in this particular case, my view on Bitcoin is the reason you do it is because it represents freedom and sovereignty, truth, integrity, and hope for the world. And that being the case, it's going to outlast all of us. My view is, if we're remembered for advocating and accelerating the adoption of Bitcoin throughout the world, then that will have been success, and I don't really need anything else.
It's amazing.
And I'll take the beatings as they come or go in order to get to that end goal, because I'm sure it doesn't come without turbulence.
Michael Saylor, founder and executive chairman of MicroStrategy, has recently addressed the turbulent price movements in Bitcoin, shedding light on his perspective amid the market fluctuations. As a seasoned business leader who weathered a $6 billion loss in a single day during the dot-com bubble, Saylor is no stranger to market volatility, an experience that may have prepared him for Bitcoin's extreme price swings. When Bitcoin dipped below $63,000 a couple of days ago, Saylor took to social media, emphasizing the significance of volatility with a tweet that garnered over 10,000 likes, showcasing his attitude towards the unpredictable nature of Bitcoin and crypto markets. In a 2021 interview with Stanbury Research, Saylor elaborated on his views regarding Bitcoin's volatility, expressing a preference for the dynamic potential of a volatile asset over the stability of a less dynamic one. He likened volatility to vitality, highlighting its role in driving growth and innovation. Recently, Saylor participated in the Abundance Summit, hosted by Peter Diamandis, where they delved into discussions about Bitcoin's volatility, 30% corrections, and Saylor's successful advocacy for MicroStrategy's adoption of a Bitcoin strategy in 2020. Despite facing skepticism from the traditional investment world at the time, Saylor believed that embracing Bitcoin was essential for MicroStrategy's survival in an evolving economic landscape. Since then, the Virginia-based firm has seen its initial $250 million investment in Bitcoin grow exponentially to a substantial holding of $7.5 billion in the leading cryptocurrency.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our Crypto Cheat Guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
What was the process of getting a public board to do this?
Well, in that case, I actually pulled the 3 most compelling videos on Bitcoin off of YouTube. You know, an Andreas Antonopoulos overview of Bitcoin, a debate by Eric Voorhees and Peter Schiff over Bitcoin versus fiat currency as money, probably some other background on Bitcoin. I put those 3 together. It's probably 3 hours of watching. I included some articles, some short articles maybe by some of the Bitcoin OGs. I sent the package off to each board member. I said, I've got some homework for you. It's probably going to take 3 to 5 hours for you to read through all this. Read through all of it, and then I want to meet with you. And I set up one-on-ones with each one of them. And so I met with each one individually. I answered their questions. Then after that, we had a group meeting, and after that, we broke into committees to study different aspects, the accounting, the disclosures, the whatever. And so it was a group process, and of course the CFO and the general counsel at the time were also heavily involved. It was never a question of do it or don't do it. It was an observation that the world had come to a grinding halt. We had $500 million yielding 0% interest. We were our stock had hit $90 a share. The enterprise value of the company was about $60 a share. And we were under pressure from our shareholders. You know, it's like you have half of the market cap of the company is cash. You're earning 0% interest. You're not beating the cost of capital. The cost of capital is the S&P return. So anybody who looks at it says, if you're not getting 8, 9, 10% on the capital, you should give it back to us so we can invest it. And so we'd reached a point where the company was looking at a fast death. We just sell the company and call it a day. Or a slow death. We keep the cash and the stock is dead money, and that means the stock options are dead money. And that was the time when it used to be employees worked for you because they liked the community and the schools and their home, and maybe they were loyal to you because they saw you every day in the office. But think about what happened in the second quarter of 2020 when nobody came to the office and they could change jobs and go work for Amazon, Facebook, Microsoft, or Google without moving. All you do is just repath your Zoom account. And so all of a sudden you're staring at big tech, the big tech companies more powerful than most countries and getting more powerful. And you've lost the human connection. They don't have to move to San Francisco. They can simply take a job. And nobody ever got hired by big tech for less money than they're making working for you. From our point of view,
you are on the precipice of a serious.
It's like sell the company or just watch all your employees dwindle. You're going to get boiled off, and after the good employees leave, the product will gradually deteriorate. And you're competing against a digital monopoly that has more power than all but 4 countries on Earth. And so we either do that, or we take a risk. And so we were basically at a point where maybe we should take a risk. Now, having said all that, what really happened there is we deliberated. It took a long time to deliberate, a lot of education. And at the end of the day, we ended up announcing that we were going to do a Dutch auction and buy back $250 million of the stock at a premium, coincidental with the purchase of Bitcoin.
When MicroStrategy initiated its initial $250 million Bitcoin purchase in August 2020, it marked a significant milestone as the first publicly traded company to venture into the digital asset space. Following the recent announcement by Saylor of MicroStrategy's additional purchase of $623 million worth of Bitcoin earlier this week, the company's Bitcoin holdings now stand at 24,246 Bitcoins, acquired for approximately $7.53 billion at an average price of $35,100 per Bitcoin. This latest acquisition of over 9,000 Bitcoins, obtained at approximately $67,341 per coin, underscores Saylor's unwavering confidence in the leading digital asset. During the discussion, Saylor also disclosed that his initial Bitcoin purchase in 2020 was for personal holdings, made months before MicroStrategy's official announcement. Saylor had acquired 17,732 Bitcoins for $175 million, a stash that is now valued at over $1.1 billion, representing an impressive profit margin of 48.5% at current market prices. As the conversation continues, Saylor delves deeper into the significance of Bitcoin in today's environment of ongoing monetary debasement.
Yeah, I think that the biggest challenge of Bitcoin is that the industry refers to it as a cryptocurrency, and oftentimes people refer to it as a digital currency, and there's a very vocal contingent that wants it to be a currency, and the rest of the world doesn't really understand money. So that being the case, let's view this from first principles, right? Money's economic energy. If you want to store your economic energy, you put it in an asset. And the assets have different half-lives with which they store the energy. Any textbook economist will say money is a store of value, medium exchange, unit of account, and they stop, and they don't really think much beyond that, and then they'll bark at you that you don't have money because you don't have, this is not good for a medium exchange, but nobody really thinks about what they just said. So if you thought about it, you would realize that about 120 currencies in the world are mediums of exchange. The peso is a medium of exchange, the naira is a medium of exchange. So weak currencies, the Turkish lira, the Lebanese pound, they're mediums of exchange. You can find a lot of them. The Venezuelan bolivar, medium of exchange. But if you go to South America, you'll find that it's not a unit of account. If you go to Argentina, the unit of account is the US dollar, and they think in terms of dollars. So there are only 3 currencies in the world that are units of account. They're the euro, the dollar, and the CNY. And so why is that? Because the mediums of exchange are weak currencies inflating at 14 to 24% a year. They're losing their economic energy over 3 to 5 years. The half-life of the money in the asset is about 5 years or less. Sometimes it's only 5 months. Like in the Naira, they lost 75% of their energy last week. So the medium of exchange only is dictated by the government as legal tender. Every government that's functional will dictate their currency as a medium of exchange and enforce that. The unit of account is generally the dollar, the euro, and currencies pegged to the dollar, you know? And the store of value, well, nobody in the United States thinks the dollar is a store of value. No rich person. If you look at wealthy people, they would say the store of value, if they're really wealthy, if they're billionaires, they own buildings, blocks, huge properties, or they own the Patriots. They own a sports team, a soccer club, or they own a collection of Picassos. That's what the wealthy use as store of value. The middle class store of value is the Vanguard 500 or S&P index. It's SPY. It's basically been the S&P or QQQ. It's basically a diversified portfolio of stocks. And that's been the status quo since 30, 40 years ago when Bogle did that. So the world today consists of 120 mediums of exchange, about 3, 4 units of account, no currencies or stores of value. And if you say to someone, what do you think about Bitcoin as digital currency? They say, well, I think it threatens the dollar, I hate it. If you said, what do you think about Bitcoin as digital property? You know, I'm gonna buy it instead of buying a building in Des Moines. They're like, oh, have at it. If you simply conceptualize it as property, which is store of value, all of the objections, all of the straw man objections, like it's used for money laundering, it's not legal tender, I can't buy coffee with it, it's not fast enough, it's not private. All of these things disappear because it's about as stupid as saying to Bob Kraft, you can't buy a cup of coffee with the New England Patriots by breaking off one of your tight ends. And you can't buy a cup of coffee with your building in Boston. You know, so of course I can't. You can't buy a cup of coffee with part of a Picasso, the lower left corner either. But you know, wealthy people have been using them as a store of value and as money for 500 years.
Saylor advocates for a paradigm shift in how Bitcoin is perceived, urging people to view it less as a currency and more as a digital asset akin to a billion-dollar building in cyberspace. During an interview with CNBC, the MicroStrategy executive chairman reiterated similar arguments, emphasizing a fundamental misunderstanding regarding Bitcoin's utility. Saylor contends that Bitcoin's true value lies in its ability to preserve wealth over centuries, comparable to valuable real estate or expensive artwork. Presenting Bitcoin as a digital property, he argues, more accurately aligns with its function as a store of value rather than a medium of exchange. Moreover, Saylor suggests that the narrative of Bitcoin as a currency makes governments and institutions apprehensive. He posits that a shift in perspective could make them more inclined to embrace the cryptocurrency. This shift, he argues, would also counter critics who advocate for Bitcoin's use in everyday transactions, such as purchasing a cup of coffee. Do you agree with Saylor's stance regarding Bitcoin's status as a digital property? Feel free to share your thoughts and comments on his discussion with Peter in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.